The Colosseum roars, a storm of voices echoing through ancient stone. Dust swirls, sunlight cuts through the arches, and armored fighters grip their weapons, praying for one perfect strike. Most fall nameless, their stories forgotten, swallowed by the crowd's hunger. Now, centuries later, the Colosseum has shifted form. Screens flicker, charts glow, and traders enter the arena with trembling hands. Here, the audience is global, investors watching scoreboards like emperors deciding fate. Amid this chaos, one figure moves differently: Patrick Nil. He is not dazzled by 1,000 flashing indicators or seduced by whispers of luck. Patrick walks into battle with two weapons honed sharper than steel: the market profile and the volume profile. With them, he carved a legacy, conquering the World Cup Trading Championships twice, scoring 247% in one campaign, 198% in another, and 5 times finishing among the elite top 10. Where others swing wildly, Patrick strikes with clarity, discipline, and a gladiator's calm precision. As a teenager during the dot-com bubble, Patrick Nil watched headlines of fortunes made overnight, powerless to join but burning with desire. The markets planted a fire that never left. Years passed, and he built a company from scratch, yet every closing bell still pulled at him like a distant drum. In 2018, with family and friends warning against it, Patrick made the boldest choice of his life. He sold his company to pursue trading full-time. Many called it reckless, a leap into chaos, but he wasn't chasing luck. He had discovered the strength of simplicity, a sharpened edge more reliable than 1,000 complex systems. Patrick stepped into the arena not as a gambler, but as a committed strategist, determined to turn discipline into destiny. The battlefield of trading is often chaotic: candles flashing, indicators screaming, traders lunging at every flicker of movement. But Patrick Nil fights differently. He carries a map no one else sees: the market profile. To him, the market isn't a string of random prices, but an auction, a crowd negotiating value. Imagine an ancient marketplace where merchants shout offers until balance emerges. The same rhythm lives inside charts. Market profile reveals the fair value area, the high, the low, and the point of control, the heartbeat of price discovery. When the S&P tested 4583 times, most traders saw only resistance. Patrick saw something deeper. The value area had shifted upward. Buyers were accepting higher ground. That told him imbalance was forming. Days later, the index surged toward 4625, exactly where structure pointed. For him, this wasn't magic. It was discipline. Too many traders chase every candle and blinded by noise. Patrick waits. He knows when price stays inside value, it's balance, a time to stand still. When price breaks away and doesn't return, imbalance signals opportunity. It's like watching chess while others see only pieces moving randomly. Patrick sees the board, the weak flanks, the sacrifice that signals checkmate. His edge isn't prediction, it's preparation. He doesn't say the market will do this. He builds scenarios. If balance holds, step aside. If imbalance forms with volume confirmation, strike. Structure gives him clarity where others see chaos. And that is why, year after year, Patrick endures while reckless traders vanish from the arena. The market's rhythm is not measured by candles alone, but by the heartbeat of volume. If market profile maps the battlefield's shape, volume profile reveals the strength of every strike. Patrick Nil listens to this pulse like a warrior gauging the roar of the crowd. Where cheers are loudest, big players commit, leaving behind heavy footprints. Where silence lingers, the ground is fragile, price ready to cut through like a blade through cloth. One example burned into his memory. March 2023. Crude oil hovered near $73. Many saw nothing but indecision. Patrick opened his volume profile and noticed a massive high-volume node at $75, the mark of armies entrenched, unwilling to leave. Below that, he saw a hollow, an empty corridor from $73.50 to $74.80, a low-volume zone. Patrick knew if price broke above $73.50, it could rush through the gap like soldiers storming undefended walls. Within 2 sessions, oil surged to $75, pausing precisely where volume had predicted the clash. For Patrick, this was not luck. Volume does not lie. Price can fake breakouts, news can mislead, but volume shows where money truly changed hands. High-volume zones are battlegrounds. Low-volume gaps are weak corridors. By mapping these, he filters noise, avoiding false fights and focusing only on battles worth bleeding for. Too many traders swing at shadows, entranced by indicators that redraw themselves daily. Patrick prefers the honesty of volume etched permanently into history. To him, it whispers probabilities, not promises. And in the arena where survival matters more than spectacle, probabilities are everything. In the arena of trading, chaos often deceives the untrained eye. Shields clashing, sand flying, random lunges everywhere. Most traders redraw lines, bend their own rules, and justify trades that never should have been taken. Patrick Nil refuses such weakness. For him, survival depends on immovable rules, set like stone pillars in the Colosseum. His code is price action, but stripped of subjectivity. No bending, no second guessing. Where others see playgrounds of interpretation, trend lines drawn from wicks or bodies depending on the mood, Patrick sees traps. His rules are fixed, precise, and unyielding. If a breakout doesn't align with clearly defined levels, it doesn't exist. If stops aren't in logical places, the trade is invalid. His process leaves no room for excuses. One example shows why. For engulfing candle reversals, Patrick demands three conditions. The candle must close beyond the value area edge, volume must exceed the 20-period average by 150%, and the prior trend must show three consecutive lower lows or higher highs. Miss even one condition, and the trade is dead. Last month, this single checklist saved him from 7 false Euro USD reversals that trapped countless impulsive traders. Discipline is his true armor. While others swing wildly at shadows, Patrick waits calmly, rehearsed blade ready. If the pattern never appears, he walks away without regret. If it does, he strikes with clarity, his moves clean and devastating. Fixed rules liberate him from noise, sparing him from doubt and hesitation. When asked if he worries about missing opportunities, Patrick smiles. I'd rather miss 100 uncertain trades than take one outside my rules. For him, freedom doesn't come from endless choices. It comes from following the code, unshakable even when the crowd screams for blood. The battlefield of trading is filled with noise, spectators shouting their truths, each convinced they see the fight clearly. One trader swears the chart is bullish, another insists it's bearish. Both defend passionately, yet both may be wrong. This is the trap of subjectivity. It seduces with the thrill of interpretation, whispers that maybe a line can be bent, that maybe close enough is good enough. But every bend digs deeper into inconsistency. Patrick Nil chose a different path. He vowed to anchor himself only to objective, measurable, repeatable rules. No bending, no gut feeling shortcuts. For him, subjectivity is the illusion of control. Objectivity is the discipline of truth. Consider two traders staring at the same Bitcoin chart. One draws trend lines from wicks, declaring a breakout at $42,000. Another draws from bodies, seeing resistance at $42,500. Both feel justified, but only one approach can remain consistent over time. Patrick's solution is mercilessly clear. Define the rules in advance. Trend lines always from bodies, always with 3 touches, always on the 4-hour or higher time frame. No exceptions, ever. This objectivity saves energy. While others argue, debate, and second guess, Patrick acts only when rules trigger. He logs every trade, recording exact conditions. The data speaks louder than emotions. In the 2022 championship, objective setups produced a 68% win rate and a 1.8-to-1 reward to risk ratio. Trades taken from feel managed just 31%, with losses mounting. The lesson carved into his process: objectivity wins, subjectivity kills. It doesn't make him robotic, it makes him free. Free from regret, free from endless what-ifs, free to face each new battle with clarity. Every market is a different battlefield, stone, sand, or iron, each with its own rules and dangers. Patrick Nil does not chain himself to a single arena. He adapts, carrying the same weapons but shifting his stance. Futures, forex, crypto, equities, each demands respect, but all yield to the same principles of structure, volume, and rules. He knows futures whisper through order flow, every contract visible like soldiers counted on the field. Forex, however, hides its heartbeat, lacking a central order book. Here, Patrick leans heavier on long-term profiles and volume zones stretched across weeks. In crypto, he respects volatility like sudden storms, widening stops, and adjusting timeframes so he can endure the chaos. Early on, Patrick tried to trade Bitcoin with the same parameters he used for the S&P. 3 stops later, he realized terrain changes require adaptation. Once adjusted, he caught a massive 40% swing using the same principles Drac just applied with patience. This flexibility is why he thrives while others fade. Many rely on edges that collapse outside their chosen market or season. Patrick builds on principles universal enough to survive, flexible enough to adjust. Value is value, imbalance is imbalance, whether in futures or crypto. The weapons remain constant, only the stance shifts. In the Coliseum of markets, some fighters charge into every skirmish, trading blow for blow in frantic duels. Intraday traders chase glory with speed, piling into dozens of moves each day. For Patrick Nil, that path is exhaustion and death by 1,000 cuts. He chooses patience. His sword remains lowered until the battle truly matters. This is his swing bias. In the World Cup Championships, Patrick learned that intraday noise devours even skilled competitors. Fees, slippage, and emotional fatigue drain accounts faster than losses alone. Day traders light up the leaderboard with dazzling bursts, but within weeks, most vanish. Patrick plays a different game. He seeks battles that unfold over 1 to 5 days, swings large enough to justify the risk, clear enough to tilt probability in his favor. While others make 3 trades a day, Patrick makes 3 to 5 trades a week. Each is prepared carefully, built on structure, volume, and rules. His equity curve doesn't spike and crash. It climbs like a staircase, step by step. Swing trading is not laziness. It is discipline with time. Structure takes days to shift, value areas breathe across sessions, volume builds in waves. Patrick aligns with these rhythms. He trusts preparation, defines his levels, sets risk, and then lets the market unfold. This detachment conserves not only capital, but also mental strength. As he says, day trading fights the market's mood swings. Swing trading rides its decisions. That philosophy keeps him steady, turning patience into his deadliest weapon. In the arena, not every battle demands the same strength. Some duels are even, others are bloodbaths, and a gladiator swinging with equal force in all of them will not last long. Patrick Nil treats trading the same way. He calibrates his risk like a general adjusting troops, sometimes conserving, sometimes unleashing, always aware of the battlefield he's on. In private accounts, Patrick risks small, usually 0.5% to 1% per trade. It's a strategy for survival, ensuring he can fight again tomorrow, next year, even a decade from now. A $100,000 account might risk just $1,000 on a single setup. A sting, not a wound. But in the World Cup Championships, the rules change. To reach the podium, triple-digit returns are required. Here, Patrick sharpens his sword and risks more, 3 to 5% per trade, sometimes even 8, when conviction is highest. A $10,000 competition account may risk $500 on a single setup, amplified by discipline and precision. The setups remain the same. The rules don't bend. What shifts is calibration, tailored to the goal. One path is survival, the other is glory. Too many traders blur these lines, carrying recklessness from contests into private accounts or clinging to safety in arenas demanding boldness. Patrick separates them with clarity. Risk to him is not a fixed dial. It is a living instrument tuned to context. In his words, at home, keep the volume comfortable. On stage, turn it up. That philosophy is why he endures privately and shines in competition. Hubris is the deadliest opponent in trading. It whispers that rules can bend, that logic is enough to tame chaos. Patrick Nil learned this lesson during one of the darkest episodes of his career, the 2020 oil crash. At first, the trade seemed rational. Crude oil had fallen from $30, a level that for years had been considered absurdly cheap. Patrick and his team believed it couldn't go much lower. They began to buy. When the price slipped another $10, he broke his first rule: no scaling beyond the plan. He told himself the logic was undeniable, that this was a gift too obvious to ignore. He added more. At $8, he broke the rule again, tripling his intended position. Then came the unimaginable. On April 20th, 2020, crude oil didn't just fall further, it went negative, crashing to minus $37 a barrel. Screens glitched, brokers panicked, markets collapsed into surreal chaos. Patrick's team escaped only by liquidating at a devastating 70% loss before the abyss swallowed the rest. The scar was deep. He admits survival came not from brilliance, but from finally obeying the rule he had ignored. Scaling without discipline was not strategy, it was vanity. From that day forward, he carved the lesson into stone. No more bending. Maximum 3 increments, predetermined levels, total risk never exceeding the original plan. No exceptions. For Patrick, that moment proved rules exist not for easy days, but for the days when logic tempts most and markets become monsters. Discipline is oxygen. Without it, even champions suffocate. In the arena, not every threat can be seen. Sometimes the floor collapses, arrows fall from the sky, or lions are released without warning. These are the black swans of trading, rare, violent events that rip through accounts, leaving even skilled fighters sprawled in the dust. Patrick Nil knows their danger. He carries scars from oil going negative, and he has seen others destroyed by shocks like the Swiss National Bank's sudden move in 2015. His defense is simple but merciless. Avoid the battles that cannot be controlled. Central bank meetings, surprise interventions, elections, Patrick treats them as ambushes, not opportunities. He refuses to hold positions into such storms. While others gamble on news, he steps aside, waiting until dust settles. For smaller reports like employment or inflation data, he shifts focus. He doesn't predict outcomes, he hunts liquidity. By placing orders near obvious stop clusters, he uses volatility without betting on the number itself. Patrick's philosophy is survival over spectacle. Missing a fortune hurts, but losing everything is final. As he says, there's always another move, but not always another account. The crowd always roars loudest when a trader lands a spectacular blow, 200% in a week, a single trade that looks like genius. But Patrick Nil has watched those comets burn out. They flash across the leaderboard, only to vanish as quickly as they appeared. For him, the true mark of strength isn't fireworks, but footsteps, the steady climb of consistency. Patrick's equity curves look like staircases, not rockets. Each step is measured, deliberate, built on structure, volume, and rules. He doesn't rely on one massive trade to define a year. Instead, dozens of disciplined trades compound into something greater than luck could ever deliver. Statistics tell the story. In one championship, a trader who led with 180% returns in the first month ended the year down 45%. Another who quietly built 20% finished second overall at 145%. Rabbits sprint, tortoises endure. Patrick embraces this truth. Consistency doesn't make headlines, but it builds legacies. In trading, survival and steady growth are the only paths to glory that lasts. In trading, there are two kinds of fighters. Some move like machines, drilled endlessly, predictable but efficient. Others improvise like artists, reading the opponent's eyes and adjusting on the fly. Most traders cling to one side, fully mechanical or fully discretionary. Patrick Nil walks the razor's edge between them. His mechanical side is anchored in strict rules. Price action checklists, volume confirmation, market profile structure, all tested, coded, and repeatable. This gives him consistency, allowing him to trade multiple markets without emotion. Like a legionnaire, his steps are drilled, precise, and steady. Yet Patrick knows markets don't always follow scripts. After 10,000 hours of screen time, he has developed intuition, moments when something feels wrong even if rules say yes. Instead of ignoring these instincts, he measures them. He journals both the signal and his gut reaction, tracking outcomes. Over hundreds of trades, he discovered when his intuition conflicted with rules, win rates dropped sharply. When both aligned, probabilities soared. For Patrick, balance is the edge. Rules keep him grounded. Discretion gives him adaptability. He is not bound to extremes, but guided by both machine discipline and human awareness. That rare combination is why he endures where others collapse. A gladiator armed with only one weapon will eventually fall. Swords fail against arrows, shields crumble under speed. Victory comes from layers, defense, offense, and awareness stacked together. Patrick Nil builds his trading the same way, weaving multiple tools into a fortress. At the foundation lies market profile, his battlefield map. It shows where buyers and sellers have agreed, where balance holds, and where imbalance waits to break. Without it, a trader fights blind. On top of that map, he adds volume profile, the market's heartbeat. High volume zones reveal where armies are entrenched, low volume gaps show fragile corridors. This second layer gives pulse to the terrain. But even structure and pulse are not enough without execution. That is where Patrick's fixed price action rules come in, the third guard at the fortress gate. Only when all three layers align does he draw his sword. If one says no, he walks away. The result is resilience. Market profile alone might mislead, but volume confirms. Volume may tempt, but rules halt recklessness. Patrick tested each tool separately. Win rates hovered near 50%. Layered together, they soared above 70%. The power is not in addition, but multiplication. This fortress shields him from noise and channels his energy only into the strongest trades. For Patrick, layering isn't complexity, it's clarity, a system of filters that bends with the market but never breaks. The lone wolf myth is seductive, but in truth, no gladiator survives long without teachers and allies. Patrick Neil's rise was forged through mentorship and relentless repetition, knowledge layered like bricks until it became unshakable. His mentor, Tom, had already walked the markets for 15 years, carrying scars from crashes and victories alike. Patrick didn't attend a single seminar and claim mastery. He immersed himself, repeating the same workshops 20 times if necessary. At first, he grasped only fragments, but with each pass, new patterns emerged. By the 10th time, he saw principles hidden beneath the rules. By the 20th, he understood exceptions and why they mattered. Knowledge compounded like interest. What seemed repetitive was really a spiral staircase, each turn carrying him higher, though covering the same ground. Over time, rules became instinct, discipline became second nature. But mentorship gave more than knowledge. It gave accountability. Each week, Patrick and his peers shared their worst trades, dissecting mistakes in front of the group. Brutal honesty burned away excuses, reinforcing discipline. Trading may be lonely, but Patrick found brotherhood. Every scar, every lesson became collective wisdom. That shared environment accelerated his growth and taught him humility. Even now, with championships behind him, Patrick admits he is still a student, still sharpening the blade. When the dust settles and the crowd leans forward, only one stage remains: the World Cup Trading Championships. Here, every move is magnified, and one slip can erase months of work. Patrick Nil has built a playbook for this battlefield, a blueprint forged from scars, discipline, and survival. At its core lies a paradox. To win, he must risk more than he ever would privately, yet never abandon structure. Private accounts are for steady growth, risking 1% or less. Championships demand triple-digit returns, so Patrick sizes up 3 to 5% per trade, sometimes more, but only when rules align perfectly. Aggression balanced with discipline. His formula is exact. Start with $10,000, target 200% in 12 months. That means compounding 10% monthly. With 3 to 5 trades per week, each must deliver 2 to 3% gains while protecting risk. The math only works if every rule is followed without exception. Preparation begins Sunday night. Patrick maps the weekly structure of ES, DAX, Eurodollar, and crude oil, studying value areas and balance edges. On Monday morning, he overlays volume profiles, searching for confluence zones where structure and pulse agree. Only then does he look to his fixed price action rules. Championships require not 2 but 3 confirmations before he acts. Swing bias is essential. Intraday duels waste energy and bleed fees. Patrick holds for 1 to 5 days, allowing structure to play out, volume to confirm, and probabilities to compound. He trades less, but with sharper precision. Consistency remains his spine. Others chase fireworks, leaping 200% in weeks only to vanish. Patrick's equity climbs steadily, staircase-like, built on patience. For him, victory isn't about dazzling the crowd, it's about still standing when the dust clears. The dust of Patrick Neil's battles settles, but now the spotlight shifts to you. Too many stand outside the arena, scrolling charts like spectators watching gladiators fight. They cheer wins, gasp at losses, then return to their own trading with no structure, no discipline, no defense. The market devours them because they chase luck instead of building craft. Patrick's journey proves another way. Survival comes not from complexity, but from wielding simplicity with precision. 2 tools, market profile and volume profile, paired with fixed rules. Consistency over spectacle, risk calibrated to the arena. These principles, repeated with discipline, turn gambling into strategy. Here's the challenge. Tonight, open your trading journal. Don't have one? Create it. Write down your last 5 trades. For each, ask, did I follow predefined rules or improvise on the spot? Did I know my exact risk before entering? Would I take the same trade again tomorrow? If any answer is no, you've found the first leak to fix. The goal isn't copying Patrick move for move. It's embracing the philosophy. Fewer tools, stronger discipline, relentless consistency. Trade only when structure, volume, and rules align. Document every decision. After 30 days, review the data. Let numbers, not emotions, tell you if discipline pays. Every champion once began as a beginner, refusing to give up. Every master was once a disaster who kept learning. The battlefield awaits. The question is not whether losses will come, they will, but whether you'll face them as a gambler chasing fortune or as a strategist prepared for war. The choice and the legacy are yours.